And the Naira has been in the spotlight for the past couple of days now after President Tinubu in his inaugural speech talked about plans to unify multiple exchange rate system in Nigeria. And just yesterday there were unconfirmed reports that the CBN devalued the Naira, which the CBN refuted also yesterday. Let's talk now about the reality of unifying the exchange rate windows. Joining me now is Kelvin Emmanuel, CEO, Derry Hills from our Abuja studios. Great to have you on the show.
Thank you so much for having me.
Good morning. So much ado about Naira devaluation. I'm sure you saw the whole drama yesterday, even though the CBN has cleared the air that the Naira was not devalued officially. What do you make of what played out, and how do you think the international community and investors are seeing all of this?
Well, yeah, the CBN does not want to officially acknowledge that at the investor and exporter dealer window, Nigerian interbank foreign exchange fixings, that the rates between the official fixed rate and the IE rates and the black market rate and all the other multiple exchange windows for FX intermediation at the central bank are different. The reality of the matter is that, like 2 months ago, I think, the IE window fixed the airline FX rate at 634. And you and I know that the Nigerian government has like $745 million FX obligations to international airlines, which, in my opinion, is the reason why the UAE government revised the visa policy for Nigerians. Emirates has about $245 million from that. Only $125 million has been provided. Cumulatively, for repatriation, there's about $8 billion in FX backlog waiting for liquidity to supply it. So the reality is that at the IE window, transactions were done at 631 that was approved by the central bank, but the central bank does not want to officially come and acknowledge that that is a technical devaluation. We wait. You know, pending when they make a decision, they get the forward guidance from the presidency and they make a decision on unifying the exchange rates. But we have to confront the demon that is in front of us, and the demon is distortion in the FX market. Distortion in the FX market is the reason why you've seen FDIs over the last 8 years drop from $4.4 billion per year to currently $468 million per year. And the reason is because foreign investors do not have a forward curve to price risk. It's very simple. They bring in their USD, you're forced to register it with no tab or certificate of capital imports at the official rate. You want to take it out, there's no liquidity for you to take it out. These are the realities that we have to confront. We have to confront the fact that unless there is unification of the exchange rate, either a devaluation to close the black market premium between the official market rate and the parallel market rate, or the CBN going all out and changing its exchange rate mechanism from a fixed peg, which we've had it at plus or minus 30 Naira per day, which is long outdated because that fixed peg worked during OBJ's time, during late President Umaru Musa Yar'Adua's time, God bless his soul, during President Jonathan's time, when the difference between the official and black market rate was not more than 3 to 7 Naira max. So when Jonathan was leaving office, the rate was wobbling between 181 and 196. That was about 15 Naira spread, which we were complaining about then. But you have a situation today where the difference between the official and parallel market rate is at about 272 Naira. So if we don't confront this demon, you're not going to see investors come back.
Right.
The other issue we have to look at, which I'm sure we're going to talk about in the course of our conversation, is the fact that Nigeria has a comparative advantage with oil and gas. Under President Buhari, the share of oil and gas to the government revenues dropped significantly. And there was like pride, that we're getting non-oil revenues. But the question I keep asking is, how do you have a comparative advantage with oil and gas? We had a crisis in the Baltics. Gas prices went to an all-time high. LNG was about $156 per metric ton. And crude oil prices went above $100. And NNPC was still struggling. I was quite impressed. You know, the group CEO of NNPC came out and spoke about the issues that NNPC has had, and the fact that it's been owed 2.8 trillion because it's having to put up monies to cover for the impairment in subsidy payments. And you consider the fact that PIA was passed in 2021, 6 months extension, February 2022. The government amended Finance Act, extended another 18 months, which expires in June of 2023, which was the reason why when the Budget Office was designing the 2023 Appropriation Act, it didn't provision for PMS subsidy beyond June 2023. We have to understand
Kelvin,
that they are...
Yeah, let me take you back, though, to the windows and transactions that have happened. You know, you did mention the INA window, and, you know, you did say that the CBN sold at 630, around that range in that market. Did you have a chance to look at transactions that took place in the market?
I didn't hear that. Say it again.
I said, did you have a chance to look at transactions that took place in in one of those windows, maybe the INE window? Because you did mention that the CBN sold at 630 to some, you know, business leaders. But did you have a chance to have a look at those transactions?
No, it's not. That's not the way the IIN window works. This is not. It was not the CBN that sold. The IIN window is like a marketplace where people who bring in FX export earnings transact with people who need liquidity, but the central bank has to approve it. If the central bank approves at a particular rate, the central bank has sent a message to the market that there is a technical devaluation. That's what it means. It's not like the CBN supplied liquidity through either the secondary market intervention system or the wholesale Dutch auction. It's a marketplace. The investor and exporter window is a marketplace where willing buyer and willing seller meets. So the CBN still has to sanction the transaction. The fact that the central bank sanctioned the transaction at 631 is a proof that there is technical devaluation in the markets.
So there is confirmation that it did sell at 631 and 630, but somehow at the close of trade, you still see it at the 400, the approved about 400 and something level. Is that what happened?
Look, it's like you having a company and the company having a website. And maybe the company provides prices on the services on the website. And because of market realities, the company has updated its pricing to customers, but it has not updated the information on its website. That's what it means. That's why I said they've not officially gazetted it and acknowledged that these are the existing market realities that they have to confront, and this is what is happening.
All right, but at the end of the day, the CBN did say they have not officially devalued the Naira, so they've cleared that, you know, for us. Even though some people say that they saw transactions for that amount in those windows. But let's go back to President Tinubu's inaugural speech about unification of exchange rates. What would unification of Nigeria's exchange rate require, you know, to actually make it work?
Look, some people are saying that we should have a crawling peg and we should be devaluing 1 or 2% per month until it crawls. I don't believe in that strategy. See, we have to bite the bullet. Unifying the exchange rate and changing the exchange rate mechanism means that the central bank has to adopt a floating rate model. And they have to close all the FX intermediation windows at the Central Bank of Nigeria, which IMF suggested in the Article 4 report early this year. All the from M and from A and from Q, it has to be shut down. Intermediation has to be by the banks. You have a situation where there are 4 major sources of FX for Nigeria. Some 4 major sources. The Central Bank of Nigeria, is important that our audience that are listening and watching today understand that the Central Bank of Nigeria does not print US dollars or any foreign currency. There are 4 major sources of FX. Number 1, crude oil earnings, which has depreciated and, you know, shrink because of the crude oil swap that the President Buhari's government ran, that was highly inefficient and had led to serious impairments and shrinked the amount of remittance that NNPC was making to the Federation account at the Central Bank. CBN acknowledged that in 2014 they were getting $3 billion monthly, and over the last 8 years it's dropped to nearly zero. We have to stop that. Now, with the fact that there's deregulation and there are free market pricing according to sections 2051 of the PIA Act of 2021, and NNPC has clarified its position and updated the price, it means that the government do not need to put up 500 to 600 billion naira monthly for subsidy, and it means that the crude oil they sell outside of the one that they are going to be supplying Dangote from June, and the excess of its deductions from JV cash calls and the feedstock is supplying in Nigeria, whatever it exports, it will be paying to the Federation account at the CBN. So you have one source. Now, that can constitute what you call the wholesale or Dutch auction system for supplying the market's primary dealers with FX that is needed. It can also contribute to the secondary market intervention system at the Central Bank of Nigeria. Then you have the foreign direct investments, non-speculative, and the foreign portfolio investments. Yeah. And the reason why that has dropped, for FPI, for example, it's dropped from 53 to about 9%, is because of the wide spread between the official and parallel market rates. Investors are not able to price risk. And even for the forwards market, where you have a situation where investors can buy forward contracts of 5 to 10 years and pay a premium to lock in price, the people who are on the other side of the trade are unwilling to put liquidity and take the transaction because they can't find a curve. The market is too steep. Then you have the side of the net export proceeds. Companies that export from Nigeria refuse to bring their dollars into Nigeria. They instead divert it to foreign accounts. They also use it to buy equipment abroad, bring it to Nigeria and sell to get their FX at the parallel market rates. And the reason is because of the spread. And this was the reason why the central bank, by the way, set up the ROT 200 program, to provide like a 65 and 35 naira incentive per dollar for people that bring their FX into Nigeria. But how will the central bank expect that companies will be willing to provide their dollars at 65 naira incentive when there's a 272 naira gap? Then finally, you have diaspora remittances, which also falls under the ROT 200 program. So basically, these four major sources of FX are impaired by the low output for crude oil production, which has layers of issues that is responsible for it, and then impaired by the huge spread between the official and parallel market rate. So basically, the CBN changing the exchange rate model from a fixed peg of plus or minus 30 naira per day to a floating rate where willing buyer and willing seller determines, and they close all the intermediation windows, all the PTA, BTA, from A, from E, from Q, from M, and allow the markets to decide the rates, is the way to attract liquidity back into the country and also Kelvin, ensure that the rates come down.
Yeah, let's imagine that this actually happens. We've unified, the rates right here in Nigeria. Is there a risk unification will also cause a surge in the parallel market even further?
So this is demand and supply, right? If all these four sources of FX starts kicking again, what you're going to see is that when there's an abundance of supply and you clear the backlog for dollars that needs to be repatriated, airline alone is $745 million waiting for liquidity to repatriate, right? When you clear the backlog, you're going to see that the rates will start adjusting back. And my calculation is that it's going to adjust and settle at somewhere between 600 and 625 naira to a US dollar. That's my calculation.
All right.
So the argument that if you allow the rate to float is going to get to 1,000 does not hold water, because the market is not one-sided. It's a matter of demand and supply.
And talking about supply, to the markets at this point, is unification, of these rates, that silver bullet that will strengthen the Naira and maybe make it the best performing currency at some point? Is that what we need? Is unification of the rates, is that what does this for us?
So there are two sides to this thing. There are two sides to this thing. The first side is that Nigeria, when you're designing your foreign exchange strategy, you have to ask yourself, does the fiscal side of the economy, in your balance of trade, are there more exports than imports? If you're an export-driven economy like South Korea, for example, then a weak Naira will make sense. But when you look at Nigeria's balance of trade, we export a lot of raw materials and import a lot of finished goods. The balance of trade is negative, which means that a strong Naira, for the time being, makes more sense than a weak Naira, okay? The other side to the argument is that because exchange rate is directly linked to inflation. And there is a demand pull factor. When you look at the fact that inflation is currently officially core at 22.22% and food at above 24%, a way that the central bank can tackle inflation is unifying, because when you unify the exchange rates and the market starts to adjust and there's liquidity in the market, you see that for the durable goods and enterprise manufacturing side of the fiscal economy, you see that there's going to be ease and less pressure on companies that import raw materials to produce, and it will begin to reflect in the prices and adjust the prices downwards. That's the reason why I'm of the opinion that the Monetary Policy Committee hiking the MPR as a way to fight inflation and keeping the cash reserve ratio at 2.5%, which is responsible for the liquidity that the central bank has supplied the federal government in ways and means in Section 38(2) of the CBN Act of 2007, is not the way to go. Because them continuing to raise, I expect that over the short term, inflation is going to continue to go up, but them continuing to raise MPR as a reaction to it is only going to raise the prime lending rate and the commercial lending rate, which is currently between 28 and 30%. There are banks in Nigeria that are lending to businesses at 30% per annum, which is unsustainable. In the debt capital market, you can also see the impact, because as the MPR goes up, you have to align the inflation to interest yield curve, and the bond yields continue to go up. So for the debt capital markets, companies are even finding that they are having to shell out between 14 and 18 to 19% per annum to borrow money in corporate bonds and commercial papers. So for me, I believe that unifying the rates has both the objective of strengthening the Naira, which is key, and also adjusting the demand pull inflationary buffers from the fact that your inflation is exposed to your exchange rates.
Right, so I guess unification is a step, in the right direction at this point. But let's talk about, you did mention the MPR right here in Nigeria, but the U.S. Fed did hint at, raising rates in its next meeting, and we know how, interest rate hikes impacts the U.S. dollar. It gets stronger, and we're seeing oil prices, trend downward at this point. It looks like these two scenarios are working against the Naira and other currencies in the global market.
Well, the U.S. dollar, you can see that the U.S. dollar is strengthening, and that is impacting on the global markets. But the impact that has on the Nigerian Naira is not as much as compared to the internal issues that we have that is causing that slide. The reality of the matter is that for you to stabilize the economy, you need to improve your credit rating. Nigeria's credit rating, sovereign rating, is at CA1 for Moody's, B- for Fitch. You need to restructure your debt and reduce your debts. You need to adjust increase your revenue to GDP ratio. You need to increase your government revenues and ensure that that government revenue to debt servicing ratio comes down from 96.30%, which is where it is at right now, to reflect the economy. So until we deal with our internal issues and start get FDIs to flow in and all the other four major sources by unifying the exchange rate and stabilize inflation and begin to trend MPR downwards, you realize that we'll keep blaming external factors that don't have as much impact on our exchange rates as the internal issues that we should deal with as a country.
Right, so I guess it's more internal at this point, even though external forces are still quite relevant. But well, let's hope at some point, we fix the internal problem so we can have a stronger Naira and get more export dependent. Thank you so much, Kelvin Emmanuel. CEO Derry Hills, always great having your perspective. Thank you.
Thank you for having me.